Continuation of Chapter 7, Planning, Section 4.6, Computer Assisted Audit Techniques. CATs can be defined as any technique that enables the auditor to use a computer system as a source of generating audit evidence. They involve the use of computer techniques by the auditor to obtain audit evidence. 1. CATs are often necessary in the audit of computer-based information systems because these systems may not provide an adequate audit trail. 2. In addition, processing is invisible because it is electronic. Therefore, the auditor needs to get inside the computer to check the completeness and accuracy of the processing. CATs allow the auditor to achieve this. Two commonly used types of CATs are 1. Audit software and 2. Test data. Audit software. Audit software is a computer program used by the auditor to extract information from a client's computer-based information system for use in the audit. The main types of audit software include 1. Interrogation programs to access the client's file and records and extract data for auditing. 2. Interactive software for use in interrogation of online computer systems. 3. Resident code or embedded software to monitor and review transactions as they are being processed by the client's programs. This type of software is called embedded audit facilities. The main use of audit software is in substantive audit testing. Example: audit software is used to extract and analyze information in the entity's computer-based information system for use in the audit work. Here are some examples. 1. Account analysis. Audit software may be used to interrogate the client's data files for the general ledger and extract from the files all items above 50,000 naira in the repair expense account. 2. Preparing an aged listing of receivables. An aged debtors list. If these are not already produced by the client as a matter of operational routine, the audit software can interrogate the trade receivable file and produce a list and analysis in date order of unpaid invoices. 3. Calculating ratios and making comparisons. Audit software can be used to assist the auditor with analytical procedures, which are described in a data chapter. Test data. An auditor may use test data to process a sample of transactions through the client's computer-based information system and compare the results, that is the output obtained from the processing, with the predetermined results that the auditor would expect. Test data is used primarily for test of controls. The technique provides evidence that specific application controls are operating effectively in a given system. One of the problems with using test data is that it can only give audit evidence about the computer system at the time the test data is processed. The test data cannot provide assurance that the system and its controls operate effectively at any other time. This problem can be addressed by the use of embedded audit facilities. Embedded audit facilities. Embedded audit facilities may also be called resident audit software or an integrated audit module. It is audit software that is built into the client's computer system, either temporarily or permanently. The purpose of embedded audit facility is to allow the auditor to carry out tests at the time that transactions are being processed in real time. Procedures are written into the entity's computer-based information system, and this generates data for audit purposes every time the system is run. In order to obtain audit data without the risk of corrupting the client's operational data files with the test data, it is usual to establish an extra dummy department. The test data results are allocated to this dummy department, and the test data is therefore kept separate from the client's operational data. Only the auditor should have access to the data stored in this dummy department. Embedded audit facilities can be very useful for the auditor of online computer systems, where 1. Data is continually processed and master files are being continually updated, and or 2. It is difficult, if not impossible, for the system to provide a satisfactory audit trail for following transactions through the system. An embedded audit facility may also print out details of the transactions it has monitored or copy them to a computer files so that the auditor can study the transactions. Disadvantages of CAT. CAT gives the auditor the ability to audit the process of transaction in a computer-based information system. However, the value of using CAT should be assessed on a cost-benefit basis. CAT should only be used if the benefits from their use exceed the cost. The costs related to the use of CAT may include 1. Purchasing or developing the programs, 2. Keeping the programs up to date for changes in hardware and software, 3. Training audit staff in their use. CAT are of no value unless auditors are properly trained in how to use them. 4. Obtaining time on the client's computer system to run the CAT. Advantages of CAT. CAT also have many advantages, which is why many audit firms use them. 1. They give auditors an ability to test the completeness and accuracy of the electronic processing itself, that is the computer software, rather than relying only on testing the accuracy and completeness of inputs and outputs. 2. They give the auditor an ability to test a larger number of transactions in a relatively short amount of time. Testing larger amounts of data reduces overall audit risk. 3. They allow the auditor to test the effectiveness of controls that are programmed into the computer software. Subtopic 5. Not-for-profit organizations. Section 5.1. Auditing of not-for-profit organizations. In any audit or review, it is important to understand the entity and its environment. A key aspect of an audit or review may be the objective that the entity is trying to achieve. In commercial organization, the objective is to make a profit for the shareholders. In the case of not-for-profit organizations, that is NFPOs, the objective is very different. It is usually the provision of a service to society as a whole or to a group in society. Examples are charities, clubs and societies, and publicly owned organizations. The service provided by an NFPO, that is not-for-profit organization, will have to be provided within the constraints of the resources it has at its disposal. In other words, an NFPO will seek to achieve its objective as far as possible with the money and other resources available. Example, charity and public sector audit. A charity organization or government department is an example of an NFPO. They have certain defined beneficiaries since they were established for the purpose of providing benefits to them, e.g. starving children, that's charity, or the public at large. Example is the public hospitals. They raise funds from the public, charity donations, and government tax revenues. They seek to spend those funds as effectively as possible to help the beneficiaries. NFPOs may be required to have an audit performed under local law, or may choose to have an audit performed on a voluntary basis in order to add credibility to their financial statements. The difference in the objectives of an NFPO compared with the objective of a commercial company will influence the approach to the audit. In addition, there may be specific auditing and reporting requirements set out in local law for certain types of NFPOs. This may also influence the audit work performed and the form and content of the opinion issued. If the NFPO requests an audit to be performed on a voluntary basis or requires a review to be carried out, the scope of the work and the nature of any report issued will be agreed in advance between the auditor and the NFPO. NFPOs, the Audits Approach. That's section 5.2. NFPOs, the Audit Approach. The auditor should recognize the specific features of the NFPOs. However, it is important to realize that the auditor is still performing an audit, and the overall structure of the audit of an NFPO will be similar to the audit of a commercial organization. However, the detail of the audit will probably differ. The main points to bear in mind with the audit of an NFPO are summarized below. These are general principles. They should be modified as appropriate to reflect the circumstances of each particular NFPO. Audit areas and comments. Planning. Consider the objectives and scope of the audit work, any local regulations that apply, the environment in which the organization operates, the form and content of the final financial statement, and the audit opinion. Key audit areas including risk. Risk. Carry out an audit risk analysis under the usual headings of inherent risk, control risk, and detection risk. Inherent risk, reflecting the nature of the entity's activities and the environment. Control risk, that is internal control and the risk that this may be inadequate. Controls over cash collection and cash payment may be a key area for an NFPO, such as a charity, because large amounts of cash may be collected from the public by volunteers. Detection risk, that is the risk that the auditor will fail to identify any material error or misstatement in performing the audit. Another audit area, internal control. Comments. Key areas of internal control in an NFPO might include segregation of duties, although this may be difficult in a small NFPO with only a few employees. Authorization of spending, cash controls, controls over income, donations, cash collections, membership fees, grants. The use of funds only for authorized purposes. Audit area, audit evidence. Comments on audit evidence. A substantive testing approach, that is, rather than a system-based approach, is likely to be necessary in a small NFPO because of weaknesses in its internal control system. Key areas may include the completeness of recording transactions, assets and liabilities, the possibility of misuse of funds. Analytical procedures may be used to make sense of the reported figures. There should be a review of the final financial statements, including a review of the appropriateness of the accounting policies. Audit area reporting. Comment on reporting. If a report on an NFPO is required by law, the standard external audit report covered in a later chapter can be used. If the audit is performed on a voluntary basis, the report needs to reflect the agreed objective of the audit. However, it is good practice for the report to follow the general structure laid down by ISA 700. That is, addressee, scope of the report, responsibility of auditors versus the responsibilities of management, the audit work done, the audit opinion, date, name, and address of auditor. Other factors to consider include: 1. Cash may be significant in small NFPOs and controls are likely to be limited. 2. Income could be a risk area, particularly where money is donated or raised informally. 3. There may be a limitation on the scope of the audit if obtaining evidence is a problem. 4. There may be a lack of predictable income or identifiable relationship between expenditure and income, which could make analytical review less appropriate. 5. Restricted funds may exist where the organization is only allowed to use certain funds for specific purposes. 6. There may be sensitivity to key statistics, such as the proportion of revenue used in administration, particularly for a charity. Section 5.3. Public sector audit. As you have seen above, the principle of an independent audit of a public sector entity performed in accordance with ISAs are the same as any other audit performed in accordance with ISAs. The key difference in the nature of the underlying entity being audited, which will impact audit risk and audit approach. Many countries establish quasi-autonomous non-governmental organizations, that is, QANGOs, QUANGOs, quasi-autonomous non-governmental organizations, which are tasked with auditing public sector entities. QANGOs may or may not perform their work in accordance with ISAs and may or may not be independent in the full definition of the terms per IFAC or ICAN's Code of Ethics. You will study public sector audits in more detail in paper B5, Public Sector Accounting and Finance. Subtopic 6, Chapter Review. Before moving on to the next chapter, check that you now know how to: 1. Plan an audit engagement. 2. Explain the various components of audit risk. 3. Discuss the principles and application of materiality. 4. Articulate the relevance of computers to auditing. 5. Describe and critically assess general and application computer controls. Quick quiz questions. 1. Which of the following will be included in an audit planning memorandum? 1. Job timetable. 2. Last year's management letter. 3. This year's written representation letter. 4. This year's draft financial statement. Option A: 1, 2, and 3 only. B: 1, 3, and 4 only. C: 2, 3, and 4 only. D: 1, 2, and 4 only. The answer is D. The audit planning memorandum is prepared before detailed audit testing begins. It cannot contain this year's letter of representation, which will not be prepared until near end of the audit process. Question 2. In addition to the traditional benchmark for materiality, what other issues should be considered in relation to materiality? A. Degree of approximation, critical points, offset and aggregation, director's responsibilities. B. Offset and aggregation, critical points, degree of approximation, losses or low profit. C. Director's responsibility, critical points, losses or low profit, degree of approximation. D. Degree of approximation, director's responsibility, offset and aggregation, losses or low profit. The answer is B. Director's responsibility have little to do with materiality. Question 3. In the context of audit planning, financial statement risk consists of A. Control risk and detection risk. B. Business risk and audit risk. C. Inherent risk and control risk. D. Detection risk and business risk. The answer is C. Financial statement risk consists of inherent risk and control risk. These are the risk of a material misstatement in the financial statement if not detected by the auditor. Audit risk is determined by financial statement risk and detection risk. Question 4. Internal controls relating to the way in which IT systems are developed and operated are known as A. Development controls. B. General controls. C. Embedded controls. D. Application controls. Answer is B. Application controls are specific controls relating to a particular IT system, that is application, whereas general controls are applied to the development and operation of all IT systems within an entity. Question 5. The two common categories of computer-assisted audit techniques are A. Audit data and test solutions. B. Bespoke system and test data. C. Proprietary control software and checksums. D. Audit software and test data. The answer is D. And we have come to the end of chapter 7. Thank you.